Good day traders, Richard Jacobs here and welcome to episode 8 for 2018 on our Underdog Trader Education channel. Let me kick off and say apologies for my voice. I've got a bit of a bug, so I'm sounding a bit groggy or croaky. But let's get into the analysis and hopefully we can just work with that. If you look at what's happening on the daily chart of the top 40 up on your screen at the moment, you'll recall one of the things we said in our last video or last recording was that if we saw the market push up and close inside of that 78.6 Fibonacci retracement of this leg of the move down, we'd be very wary of approaching short positions because this would increase the likelihood that the market could break structure and pop to the upside above this all-time high over here. Instead, what's interesting is that we push to the upside. And again, we had sellers coming into the market, pushing the market down, and in fact put in a negative day on the markets closed down. So we put in a bit of a high over there, but another long wick manifesting over there. And while this isn't sort of what I would call a decisive reversal candle, or what I would view as such, it does reflect that some uncertainty has crept into the market because you've got a bit of a tail and you've got a bit of a wick over here. So there's a lot of buying, selling pressure being exerted in the market at the moment. Still, in terms of range, we put in, the ATR is sticking up above its 50-day moving average, which is great. Range on the day 485, probably about 600, let's call it 600 points or so. Or 700 points. So perhaps some opportunity there. We'll look at it in the daily analysis. So today was also classified as an A day in our book. Tomorrow is going to be interesting because we put in a higher high, but certainly not the higher close. So we're going to take some risk off the table and revert to standard sizing and go with a B day standard sizing for all tomorrow's intraday trading, and just sort of reflecting, I suppose, to a certain extent also that uncertainty and that pressure in the market, because when you get a lot of that buying selling pressure, things can get a bit choppy. So not a bad option or not a situation to be in to reduce our trade sizes somewhat going into tomorrow's session. So where to from here? Well, certainly we could, it's difficult to say, we could see the market push to the downside, or if these sellers and the selling pressures overcome over here, it could certainly pop to the upside as well. So options in both directions really at this stage. It remains overbought, but short-term momentum is to the upside based on how this market's been pushing up all year thus far. If we look at it through the before we get to the currency, let's look at the intraday version of what's happening over here. So there we go. Let me just there we go. So lines in red highlight today's price action, and as you can see, quite really, not as clear cut as yesterday, where we had this push to the upside. And then we had this retracement into the close. We had the continuation move playing out early on. Let me just see where the market had retraced to. It retraced into the 38.2, continued to the upside, and then we went into what I would call complex retracement. In other words, the market pushed up and then didn't regain its previous highs and instead chopped downwards. And now look where it's come back down to. I highlighted this to you guys yesterday. This previous price structure support, so resistance, now potentially support, which lines up quite nicely, almost perfectly, with the Fibonacci retracement level of 61.8. And from those levels, you'll see in the last few candles on the day that the market found a bit of a bounce, although it then pushed down again into the close. So just based on the short-term upward momentum, despite this choppy retracement over here, you'd still have to be a bit bullish, with the expectation that there could be the potential for further upside from these levels. As a pure structure trader, if you're trading the 15-minute chart, you might even have gotten long as the market pulled into the 61.8 and then put in a few bullish candles over here. That might have been an opportunity for you to get long, put your stops in below the swing low and try and ride it to the upside. So that's what we're seeing on the 15-minute chart. If I have a look at what's happening on the excuse me, have a look at what's happening on the sorry, that's a pair. Let's have a look at what's happening with the currency first. So at last we've broken out of this range that we've been eyeballing pretty much all year. Market has been come down. The rand has strengthened substantially. Let me just zoom out for a bit. Zoom out some more just to highlight the extent of that strengthening. So very strong strengthening of the rand all the way down, and it entered the sideways choppy range bound period over here, which lasted pretty much about 5 weeks or so, 4 weeks maybe. And now what's happened is we finally saw a breaking close out of this zone over here. So trend is certainly now to the downside, further rand strengthening on the cards. What you would expect is with the rand strengthening, that would have a negative impact or put some downward pressure on our own local market as well. So that's one aspect to consider. The other one is if you look at what's happening in the US, and again this is something we highlighted, the potential double top over here, market pushed up, but in this sharp retracement over here, then reassaulted, took another shot at this high, in fact touched at that very point, and it looks to be rolling down again. If we see that break below this 2768, that would be extremely bearish in the sense of that would confirm the double top, and we would expect further downside in the market. So at the moment, marrying that up with our analysis over here and our intraday analysis, it does seem that even though we may see some consolidation in things like the rand following the break out of that range bound structure, there's certainly the potential for further downside, and that's combined with downside in the US markets as well. That could certainly add to the case for the sellers taking the initiative and pushing this market down. Perhaps we see that lower low, lower close that we pretty much haven't seen since this trend began. We haven't seen a lower low, lower close being printed. So that's certainly something to eyeball as we go into the new month. If that is the case, just intraday traders, just going back to that intraday chart over there, and I know that's a bit that's when analysis becomes a bit contradictory, but intraday traders, just be a bit wary. If you haven't gotten into a structural position to the upside, what I'd actually wait for another confirmation here before trying to get long on an intraday basis. If I look at the market now, out of market trading, it's about 8:24 p.m. on Thursday the 18th of Jan. It's pointing to us being down about 126 points, 53.9. Well, it's actually a bit higher than these levels. Let me just check. Yeah, we're probably around about these levels over here. So just keep an eye on this low, on what's happening on the currency and the international front into close, especially before you position yourself going into the new trading session. I think waiting to see where the market opens is going to be an important approach. One of the things that a lot of traders do is to try, or some traders do, is to try and trade the out of market trading action. Very difficult on something like the top 40, I find. It's a vastly different proposition to something like the currency market, where you've got lots of market participants and liquidity. So finding price price discovery becomes a much more viable option, or much more it's much easier to try and trade it, given the extent of price discovery on those forex pairs, etc. Not so much on the top 40. So yeah, on the side of caution if you can, and rather wait to see where the market opens and what the trading action is going to be before you excuse me, position yourself. So guys, that's what's happening on the top 40. How did we do today? We only had one trade. made about 82 standard points, but because it was an A day, we weighted that up to 148 points, so not too bad. I think we tapped a new equity high at 1323 on a weighted basis, which is great to see. And we, on a standard basis, we at about 260 points. So it's a fairly standard day. I think one of those things you aim for as a trader is you want those opportunities where you have small losses, small gains, small losses, small gains, and then you want to hit one or two out of the park in a month. And really, this is one of those days where I think a small gain is perfectly fine. Keeps things ticking over, keeps the equity curve alive, and pretty happy and comfortable with that. Right, so that's what's happening on the top 40, and in our own book, if I then switch hats and look at what's happening on the offshore account, let me just pull that up, give me one sec. Okay, so that's where we are at the moment. We've got 5 open positions. We've got 4 closeouts since the last time, or the last recording I did. Just started to analyze the closed out positions over here because I find the open positions distorting somewhat. So we've closed out 25 trades, 10 winners, 15 losers, 40% win rate at 2.14 to 1. That's pretty acceptable. Nice to be starting to build up some of the volumes, because it just makes things start to become more statistically significant in terms of analyzing our performance. Not that 25 trades is significant yet, but 25 trades in 18 days, it's pretty high volume of frequent trading that we are doing, despite this being all of 4-hour charts. What's nice about it, and I think I've mentioned this before, is that trading off these 4-hour charts allows you the flexibility of just spending a few minutes to analyze the charts and to make your trading decisions, given the very simple price structure trading that we're applying in this challenge. Okay, let's look at what's closed out. We had this Euro pound short position over there. Let's have a look. What's happened is, remember, we got short. I'll just go back quickly. Market had been chopping along, broke structure to the downside, put in this deep retracement over here, but didn't break and close above the previous structure level, then pulled back inside that 78.6. Remember our discussion about the 78.6 Fibonacci retracement of this leg of the move. We got short on Friday the 12th of Jan, and we had to exercise quite a bit of patience as the market pushed down, chopped sideways, pulled back to open, chop, and eventually just broke to the downside beautifully into our target zone. So we took profits off at 88.15 for 79.90s worth, or 79 pounds 90 profit. Decent one. Not so much on Euro Japan. I think that's probably been a standard be corrected. Let me just have a look back here. Yeah, I don't think we've had a winning trade on Euro Yen, to be honest. It's been one of the bugbears in our trading. If I look at what's happened over here now, we've already had two shots at the at this downside structure break retracement, got short, got stopped out, got short, got stopped out, and we've gotten short again over here. In fact, I think we're missing one. I think we may have gotten short again somewhere over here. In any case, we got stopped out. In fact, this is I'm mixing things up. This is the trade I was talking about, where we got short at this level over here, tried to ride it to the downside and pretty much got stopped out. We've now gotten short again, so it's one of our open position as well. So let me just clear up the confusion. That's the old trade over there that we've got stopped out on, and we've now gotten short yet again, as the market put in this complex retracement, but put in this really bearish looking candle over here, and hopefully we can see some traction over here. It's quite a big trade in the sense of we're risking 47 pounds to make 172. So this would be a nice one to try and, it's not going to play out overnight if it does get going, but certainly it would be a nice one to compensate for the 2 or 3 losers that we've had on this particular pair thus far. Right, so So that's Euro Japan. The other one is Euro franc, Swiss franc. This is a weird one, and there's probably a bit of learning in here as well. You look at what happened over here. I think this is one of the ones in our last recording where we're actually pushing down sharply towards target. We had this little break of structure, retracement, so we jumped in here off a quick trade and pushed to the downside, got short, at push down, tapped our target, didn't take us out of the trade unfortunately, and pulled all the way back to open, at which point I pretty much just cut the trade. So quite rather disappointing, but at least we didn't lose any money on it. Yeah, we scored a whole £1.49. So sorry, the learning from that, possibly, I'm still of the view that you leave these things to their own devices, but one of the learnings could be you want to maybe front run your target slightly by a few pips just to try and get out of position ahead of some of the other market participants who are eyeballing that same swing low. Right, and then the last one we closed out on for a small loss was Euro franc. I'm not sure if I marked that up on the charts, but let's have a look. No, I didn't mark that up on the charts, but it's very straightforward over here. This is one of those that pushed to the upside, retraced. We've had one bite, stopped out, second bite, stopped out. We've now pulled into that 61.8 retracement area. If we get another potential entry, we're certainly going to try and go for it again and push to the upside. So yeah, just one of those things. And again, small loss, which is I think is exactly where we want to be, either taking small losses or bigger profits. And then we've got our 5 open positions, so let's run through them very quickly. I'll run through them on the fly. USD CAD, we've got a long position open over there. We actually got long around about a year, or I think of this candle over here. There's our entry, stops are down here, and we're targeting a move up to the swing high there. So this is risking 61 to make 76. Yeah, we're just going to keep an eye on it. It's hovering just below entry at the moment, so hopefully we can get some momentum going on that front. Oil's been a tricky piece to trade of late. Recall we had this push to the upside, nice trending market, deep retracement. Got long, well that one got stopped out, but we got long again there. Then the market pretty much rolled over here, didn't reach our stop, which is positioned below the swing low over here. And now we've got this fairly decent looking green candle printing and pushing it back towards open. So again, one of those ones we will just keep an eye on and see where it goes to. Euro USD, this one is a bit trickier. I mean, in terms of our price structure rules, it's pretty much on the cards. Market push to the upside, putting in a higher high over here, retrace back into the 38.2. We get the bullish candle printing over there. What's nice about this one, we've actually rolled stops a bit already, so we left with that much of risk, about £35 to make 78. That's not our original risk to reward, but that's where we are at the moment as the market's sort of pushed to the upside. So I'm looking forward to see if that one can push to the upside as well. What makes this tricky is we've also got, if you draw structure in a different way, the market had pushed to the upside, put in a bit of a retracement, pushed to the upside, putting in a potential double top there. And let me just have a look at this. We could be seeing a lot of punters doing a 61.8 trade on this double top. In other words, you wait for the double top to confirm on a break of that midpoint, and you wait for retracement back up into the 68 to get short. So that could be why we see some selling pressure coming in over here and a roll to the downside. But our system is a pure price structure trading system, so we're going to go with the long at this stage. Right, what else? Two more. I'm going to work through them a bit faster. Euro Japan. yen short trade, again one of those off this impulse leg. We've tried multiple continuation moves, not hasn't really played out. Oh sorry, have we covered this one? This is the one we covered, apologies, when we looked at the closeout. So the last one we actually want to look at is USD yen. This is again a short position, apologies. The push to the downside, retracement back up into the 38.2, bearish candle, and we get short, and we're hovering just above entry over there, looking for a relatively short push to the downside, so not a massive trade. So it would be nice if we can just see this one pop down. So guys, that's pretty much it from our side. Tomorrow's going to be an interesting day as we head into the end of the week to see if the market can give an indication of whether or not it wants to start putting that continuation move to the downside off the daily charts, or whether we're still going to chop around and try and break through the selling pressure that's pretty evident here over the past couple of days. I wish you all the best with your trading, and have a great weekend. Chat to you soon. Cheers.